Hello everyone, Dave Keller here with Market Misbehavior. Today we're going to be looking at the S&P 500, in particular in overbought conditions. What does it mean that the S&P 500 is overbought? Is that short-term positive or negative? What about the long-term trends? What can history tell us about what happens during these overbought conditions? So today it's the S&P 500 being overbought. Hey everyone, thanks so much for watching my video on the S&P 500 facing overbought conditions. Momentum is a way that we try to translate a security's price movements into a standardized form, how we try to systematically understand the momentum behind price movements. And RSI, the Relative Strength Index, is one of the main ways that we can understand relative price movements and try to figure out when a security has moved too far too quickly in one direction or the other. Before we get to the chart of the S&P 500, I just want to thank you again for watching it. If you like this sort of video talking about investor behavior, decision making, using the power of charts, I hope you'll subscribe to my channel. I'd love to have you along with the journey. Give this video a like. Put a comment below. Do you think this overbought condition is the sign of short-term strength or weakness for the S&P? What's your take on it? Let's get to the chart. All right, so here we're looking at the S&P 500 for the last 2 years. It's a daily bar chart on the top, and then at the bottom we have the RSI, or the Relative Strength Index. Now, it's kind of a misnomer. When Wells Wilder created the RSI indicator in the 1970s, he called it Relative Strength Index, and it's an unfortunate title because a lot of people think it means relative to something else. But in reality, the Relative Strength Index, RSI, is a measure of price momentum. What it's actually doing is it's looking at a period of time, and it's saying when the security closes higher than it did yesterday, how much higher does it tend to go on average? And when it closes down on a day, how much lower does it tend to go on average? So during any sort of move, you have some up days and some down days. How strong are the up days? How strong are the down days? You take a ratio of that, you do an exponential smoothing, which is just a different way of combining and aggregating the values over time, and then you get the RSI, the Relative Strength Index. So it is really not relative to anything but itself. And the way to think of it is it's the movements in price relative to the normal movements for that security. So if you look at a bunch of different things and sort a list of tickers, a list of ETFs or stocks by their RSI, it's a pretty good way of measuring relative strength in the trend, because the higher the RSI, regardless of how volatile the security is or how much the price tends to move or whatever, it is basically a high RSI means a similar thing for most securities, regardless of the volatility. That's why it's kind of a helpful indicator, because it allows you to make an apples to apples comparison from a lot of different things. So when we're looking at the S&P 500 and we talk about price momentum, RSI is one of my favorite ways to do that. And essentially, here are the basic ways that you interpret RSI. It fluctuates from 0 to 100. If the RSI is at 50, it essentially means the absence of trend or equal momentum. That doesn't mean that the market's not moving. It doesn't mean that the price isn't moving, because prices are always moving for the most part. What it just tells you is that overall, we're sort of at an equilibrium. Up and down days are relatively stable for a recent period of time. The RSI is above 70. That means it's overbought, and generally speaking means things have moved too high too quickly. As a result, you'd most likely expect the price to come back down. When the RSI is oversold, it means it's gone too low too quickly. And usually you'd expect a bit of a bottoming pattern. If you look back at the year 2019 on the S&P 500, you can see that the overbought and oversold conditions were a pretty reasonable signal of when the short-term trends were going to reverse. And if you look at that middle of the year, right? So you had the big rally out of the 2019 lows. You had this sideways period where you had a move up to a new high in May. It was overbought. We sold off and made a new swing low in June. It was oversold. The market rallied. You can see it became overbought. Then it ended up coming down, oversold in August, and it pops back up. Super easy, right? So all you need to do is look at when the RSI is overbought, oversold. Well, that works until we're in an extended trend. And when the trend persists, you will start to see an overbought condition actually be a positive thing. If you look at the end of 2019, you can see things changed a little bit. The RSI became overbought in November. The market continued higher for 3 more months, right? You continue to make higher highs. Every time we traded higher, the RSI became more and more overbought. The opposite, right? When things sell off, you can see that the RSI first became oversold here in late February of 2020. The S&P obviously continued much, much lower, getting down, almost another 100 points, maybe, 700 points or so from that oversold condition before the final bottom at on March 23rd of 2020. So all of a sudden, it's no longer that great of an indicator, right? So what happens is the indicator, it depends a lot on the overall trend conditions that we're in, right? During an extended bull market phase, which we've certainly been in, what I would look for is when the RSI is overbought. You can see that that's happened twice in the last year. Once in June, which ended up being a brief pullback from around 3,200 to 3,000, so about 200 points or so, 8 to 10%, 8%. And then again in mid to late August, it continued higher. And then you saw the pullback that happened in September. So both of those, within the context of the uptrend, were pretty good pullbacks. Those are sort of the actionable pullbacks, opportunities to buy on the dips within the longer term uptrend. But both of those at the time felt pretty severe. It felt like things were really coming down very, very quickly. So, what does it mean right now that we're overbought, similar to those overbought conditions? So here's the thing. If it's similar to what we saw in June, that means we're sort of at the top. You'd expect a quick pullback. If it's more like we saw in August and September, it actually can continue overbought for an extended period of time. There are a couple of weeks where it remained in the overbought condition. So the first thing I would tell you is just because something becomes overbought, that on its own is not a negative sign. That's actually a very encouraging sign. That tells you that the security, the stock or the ETF has gone up a lot. We always would say overbought means up a lot. That's it. So when the RSI is above 70, all that means is the price has gone up a lot. In a lot of ways, that's a good thing. That's what we are hoping for if we're bullish on the market, or we want to see prices go higher. So in this case, in November, overbought conditions were actually pretty encouraging. Once you become overbought and you have sort of an extended bull market phase, which I would argue we're certainly in, the real signals are less overbought conditions and more divergences. What you want to look for is when the price is going higher and you don't have an overbought condition. That's what we saw in February of 2020. So January of 2020 to February, you saw higher highs in price, but you saw lower peaks in RSI. That was a bearish divergence indicating an exhaustion of the uptrend. This is one of the reasons why I became a lot less optimistic about 2 months ago here in mid-February, when you had a higher highs in price, but lower peaks in momentum. The real difference, I would argue, between these two is the real difference is in late 2019, early 2020, you had become overbought for quite a while. You'd spent a lot of time in the overbought region, which indicated the strong upside momentum. And as we continue to push higher, the first time we made a new highs and it did not become, or made a new high and it did not become overbought, that was a real signal. Given the extended bull market phase, that would be the real indication I would be looking for that would signal more of a broader top to get really nervous about, right? Now that it has become overbought, a new high that does not have an overbought condition would be a majorly warning sign. It does not always happen, and I can't guarantee we would see it now because arguably we've been seeing those breadth the RSI divergences over the last couple of months. They haven't played out. The S&P's continued to go to new highs. So when I mentioned the S&P being overbought and suggest short-term weakness, for me, it's looking back at some of these short-term pullbacks, often which you will see the RSI become a little bit overbought and pull back a bit. The concern or the reason why that is not 100% effective as a short-term reversion signal, mean reversion signal, is because during extended bull market phases, which arguably we are in, you will see something become overbought and stay overbought. And in this sort of situation, what I would look for is a new high that is not confirmed with a overbought condition. That would be a major warning sign. It started to feel like we were going to have that in the first quarter. We did not. That's what I would be looking for now. At the end of the day, as a trend follower, things like momentum and looking at price strength using RSI are just part of the story. In an extended trend, I think the most important thing you can do is follow price. That's why for me, the number one thing I would look for is Dow theory, which is the market making higher highs and higher lows? And most recently, the S&P has established new highs. And when it's pulled back, it's made a new low. So the real question is, at some point, we will get a pullback in the S&P. That's absolutely right. Do we remain above the previous swing low? And as long as that continues to happen, the uptrend appears to be in pretty decent shape. So that is how we'll use RSI. That's what I think the overbought condition is telling us. Overbought means up a lot at this point. It tells you that the uptrend is in pretty good shape. I would be more concerned when we see the price moving higher without an overbought condition. So that's the video for today, really thinking about the overbought conditions in the S&P 500. Again, I think when people are just getting started, you tend to think of overbought as bad and oversold as good. And in a short-term time frame, if you're looking at a 1 week period, a lot of times that can be a good, short-term swing trading sort of methodology. Use a less period, a shorter period, a lower value for the RSI, and look for quick mean reversion. But the way that we normally use it, looking at stocks, looking at the S&P, overbought actually is a good indication. It tells you overall that the trend is in good shape. The real concern is when you don't get confirmation from an overbought reading. That's what starts to indicate some trend exhaustion. That's what I'd be looking for. Interestingly enough, if you look at a chart of the TLT, you will see that sort of an inverse of that, sort of a bullish divergence. Lower lows in price recently, higher lows in the RSI. That's why I would argue one of the reasons why we're seeing a bounce in bond prices here this week. That's it for everyone here at Market Misbehavior. Thanks so much for watching. My name is Dave Keller. If you like this sort of thinking about technical analysis, about market psychology and investor behavior, consider subscribing to my channel. Give the video a like, put a comment below the video, and let me know what you think about this overbought condition. Is this cause for concern or cause for encouragement? Have a great day. Stay safe. Talk to you again soon.